Not taking profits as a beginner crypto investor won't just make you lose a lot of money, it will literally make you think the worst about crypto. I genuinely think that there is a better way to do this, and I will prove it to you in this video. For the people who don't know me, hi, my name is Jesse. I've been investing in crypto for about 5 years and in stocks for 10 years. And in the last 4 years, I have helped a couple of clients generate tens of thousands of dollars and euros in the crypto markets. And in my private life, I'm a software developer. In this video, I will show you what are the risks and consequences of not taking profits in crypto, how to determine when to take profits in a volatile market such as crypto, and towards the end of the video, I will show you effective strategies to make profits. But first, what do you think could happen to your crypto portfolio if you don't have a clear strategy for taking profits regularly? The crypto market is very volatile and can change a lot very quickly, with prices going up and down. If you don't take profits, a sudden drop in the market could wipe out all your gains, leaving you with big losses. On top of that, if you don't take profits, you might miss a chance to invest in good crypto projects. Taking healthy profits allows you to diversify your investment, which leads to bigger returns and less risk. And this is exactly what we want. One of the best ways for beginners to start investing in crypto is through the DCA strategy, dollar cost averaging, which is an accumulation plan to buy or invest into good quality cryptocurrencies regularly for the long term. A clear example of the dollar cost averaging strategy is buying or investing $200 or euros in Solana every single month. The main purpose of the DCA strategy is to minimize the risk of volatility by trying to lower your overall average cost of the investment. In order to take profits, I want you to use this strategy, but in inverse, or the other way around. So instead of investing or buying crypto gradually through the DCA strategy, you sell your cryptocurrency for a profit gradually. This is the strategy that I used to take profits, which I started using in the 2021 bull market. It's not perfect, it's not flawless, but it helps you keep most of your profits made in crypto. I personally think that all crypto investors need to accept the fact that we cannot perfectly predict the highest points and the lowest points of the market. So I think it's essential, and we need models and strategies to stop our emotions from taking over. The worst thing you can do as a crypto investor is to sell all your crypto at the start of the bull market, when the prices are starting to recover from the lows. The reason why I think it's a bad idea is because you will miss the chance to make more money as the market goes up in value. The best approach to use these strategies is to take profits step by step when certain conditions are met. When you decide to take profits, you can use these conditions as a framework. If your initial investment doubles, increases 100%, take the profit from the 100% gain and keep your original investment in the cryptocurrency. Additionally, for every additional 50% increase after the initial 100% gain, take a 20% profit. Let's drive this scenario with an example. You invested 1,000 euros or dollars in Bitcoin when the price was $1 per coin. The value of Bitcoin doubled, reaching $2 per Bitcoin. So your investment is now worth $2,000 or euros. You decide to take out 1,000 euros or dollars as a profit, leaving you with 1,000 euros or dollars still invested in Bitcoin, in case the price goes up again in the future. Now, in addition, for every additional 50% increase in Bitcoin's value after this, you take a 20% profit from the remaining account. So if Bitcoin rises from $2 to $3, which is a 50% increase, your 1,000 euro is now worth 1,500 euros. You take a 20% profit from the 1,500 value, which means that you take 300 euros or dollars as a profit, leaving you with 1,200 euros or dollars still invested in Bitcoin. This strategy allows you to take profits in a rising market while keeping your initial investment or risking only a small part of it. The percentages that I just mentioned in these scenarios are just examples. Keep in mind that these percentages can change based on your own personal preference, and they also depend on the current market cycle. For example, in an early rising market, I will take a 50% profit when the market is just starting to go up and people are still feeling a little bit skeptical but becoming more and more optimistic about crypto. In the late stages of the market, I will try to sell almost all my positions, about 80 to 90%, towards the end of the bull market. Be careful because this strategy does not apply to all cryptocurrencies. For example, large caps such as Bitcoin, Ethereum, Solana, BNB have different performances compared to some of the mid caps and smaller caps. Achieving a 100% increase is much more difficult in certain market conditions. So, in my opinion, it's advisable to take profits every 50 to 60% increase. What I just explained is gradual profit taking and is the first method to grow your crypto portfolio for the long run. In crypto, there is a practice among traders and short-term investors that is actually quite clever, but is a double-edged sword. This tactics often comes into play in the early stages of a bull market or accumulation phase, when excitement starts to surge and some crypto projects start seeing gains of 100%, 200%, or even 400%. Traders and investors essentially start playing the hot potato game, where children pass around a potato quickly while music is playing, and when the music stops, the child that holds the potato has to do a penalty. If we compare this game to the crypto market, I would say that the game is the entire crypto market. The hot potato is the constant buying and selling of cryptocurrencies to grow the portfolio. The music is the market sentiment or short-term trend, and the penalty is the loss of money by picking the wrong crypto investment. If you invest in the wrong cryptocurrency and lose all your money that you have made in the recent months or years, you have literally made your capital work for nothing and you're back to square one. You need to understand that altcoins in the mid caps and small caps are good for high returns, but they are not good for holding value. In the later stages of a bull market, it's best to take profits and keep them in stable coins such as USDT and USDC. Or you can also keep them in large caps such as Bitcoin because they have lower risk. The money collected from the profits made in crypto can be used to buy other investments such as stocks, real estate, good businesses, and good crypto projects in the bear market when the prices are low. Constantly rotating your profits into riskier and riskier crypto projects is a strategy that can help you grow quickly, but it is not sustainable in the long term because of the constant exposure to higher risk investments. So far, we have talked about how to take profits gradually so that you can survive the bull market with a positive balance and show up to the bear market with the liquidity or money needed to take advantage of excellent opportunities at low prices. In addition to these strategies, there are indicators or signals that can help you decide when to start taking profits. One clear sign that we might be close to the peak of the bull market is when you see crypto influencers or celebrities promoting leverage trading or trading bots on social media. These influencers often take advantage of people's excitement to sell products or earn money by promoting exchanges. Promoting leverage trading is not wrong, but the problem that I have is that it's directed to people or investors who are beginners or are new to the space and they don't really have a grasp on the risk involved in using leverage. Another sign of market peak is when people who have never invested in crypto before start talking like they have been crypto experts for years. For example, if your taxi driver or barber starts talking about crypto, it might be the time to consider taking profits. I personally think that if someone hasn't been interested in crypto for over 2 years, their sudden interest can be a signal to sell my crypto for profit. A popular indicator in the recent years is the ranking of the Coinbase app in the App Store. Coinbase is of course one of the biggest exchanges to buy and sell crypto. And if the app is at the #1 spot in the App Store or is in the top 3 spot in the App Store, it might signal that we are close to the peak of the bull market. This indicator has been a pretty good tool to accurately understand where the market stands within a crypto cycle. In the video description, you will find the Twitter account that tracks the Coinbase app ranking in the App Store. If you are a beginner in crypto and you thought that this video was useful, I think you might also want to know when is the perfect time to buy crypto and differentiate yourself from 90% of the people who don't want to understand it and fail to understand it and end up losing all their money because they invest at the absolute worst times. I highly suggest you to click on this video to learn the next step into growing your crypto portfolio for the long term. Thank you for watching and subscribe if this video was helpful.